If you are having a hard time identifying uptrend or downtrend, being able to separate a corrective move from an impulsive move, and you're confused when you go to the lower time frame because you don't know if the market is uptrend or downtrend, and you don't know what you're dealing with, this video is for you. I will show you how to identify the market structure on the higher time frame, impulsive move from a corrective move, and how to use this information on the lower time frame to execute any trade. Learning is very important, guys. Knowledge is power. I don't care what anybody says. So be humble, take notes, and use this information on the chart and be the judge. And I will show you how to be confident in trading step by step using this information. This is the tip of the iceberg. My name is Jamal, by the way. Welcome to Forex Som. If you don't know me, please go watch my other videos, subscribe to the channel, and like this video, and put all of your comments and opinions in the comment section down below, because we don't judge here. We take each other's information. If it's a valuable information, we use it. So go ahead, put your comments in the comment section down below. All the links are in the description. Please, I don't want to waste your time. Let's get into the charts. Understand this better, we're going to start with illustration, and then we're going to go to the real chart and do this step-by-step process. First thing first, here we have a hypothetical structure of how it looks like an uptrend move on the higher time frame. On the higher time frame, everything looks clean. A, B, C. So here, A leg, impulsive, B leg, corrective, C leg, continuation. You can also use numbers. 1, 2, 3. Impulsive, corrective, continuation. All right. Why is this continuation? Because why? It created a break of a structure. It created a break of a structure. So, and this is what we call an impulsive move. Let me change the color to make it look better. Okay, this is an impulsive move. 1. This is a corrective move. And then this is a continuation move. 1, 2, 3. Your job as a trader is to know what you're dealing with. If you're dealing with an impulsive move, or if you're dealing with a temporary corrective move, or if you're dealing with a continuation move. This is very important. It looks very clean on the higher time frame, but then when you switch to the lower time frame, it looks very messy because of the data. The lower time frame you go to, the more information you see on the chart, and it creates a lot of confusion for many traders, especially the ones that are just coming to the market, or those who are not understanding market structure. So lower time frame, this similar information on the higher time frame, on the lower time frame, it looks this much information. So it gives you a lot of moves like high, 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 low, high, 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 low, high, 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 low. But then in reality, this is one complete move. And then you can see the corrective move. We have the break of structure, but the corrective move gives you lower high, lower low, lower high, lower low, lower high, lower low. All right. If you are not aware of what's happening on the higher time frame and not know this is a corrective move, you might think that price action is basically trading to the downside, or you're dealing with a downtrend market. But in reality, this is just a corrective move. So this is a correct move right here. And then we have a continuation move. Why is this continuation move? The reason why is because we also have a break of structure, remember, from the higher time frame. This in continuation move broke this high structure, and now this corrective move is finished. Market continues to the upside, aligning with the higher time frame
impulsive move. It does the same thing on a downtrend market. All you have to do is just flip this chart and you will see the same thing for a downtrend. Let me try to do that real quick. So this is how it looks like on a downtrend market. Impulsive, corrective, continuation. High time frame, very clean. Lower time frame, too much data. Impulsive, corrective, continuation. In another way, we call this drop, base, drop. Drop, base, drop. Okay, this is only if you're using a supply and demand method. And the uptrend, we call this rally, base, rally. Rally, base, rally. So basically what it means is, in simple term, impulsive, corrective, continuation, impulsive, corrective, continuation. Rally, base, rally, rally, base, rally. Very easy, guys. You have to be able to identify this on the chart. It's easier to say it than get it done when you get to the chart, because by the time you get to the chart, your anxiety is all the way up and you're confused. Now you don't know what the hell is happening. Now let me go to the actual chart and show you this on a real chart. Okay, now we have a real chart. On the daily time frame, we can see higher high, higher low, higher high, higher low, higher high, higher low. And then we have an impulsive here again. So we have an impulsive, corrective, impulsive, corrective, impulsive, corrective, and then impulsive. Okay. Let's get this price here, okay? Let's just focus on the uptrend first. So this is an impulsive move. A. This is a corrective move. B. Impulsive move, corrective move, impulsive move, corrective move, impulsive move. Okay, as a trader, your job is to be able to identify on the high time frame if you're dealing with an impulsive or you're dealing with a corrective. Impulsive, corrective. Here, for example, we have an impulsive move. From here to here, impulsive move right here. Okay, here we have a corrective move. From here to right here. And then after that, we have a continuation move from here to right here. So why do we call this a correct impulsive move? Why do we call this a corrective move? And why do we call this a continuation move? The reason why is because this was an uptrend, impulsive, and this was the move to correct, the uptrend, and this is the continuation for the uptrend. Okay. And the reason why we call this a continuation is because we have a break of a structure on the higher time frame. Here we have a break of a structure. So this becomes a continuation move. But the question is, if you go to the lower time frame, this will be too much data for you. This will be too much data. And this will be even much more data. So without you knowing what's going on in this higher time frame, your job as a trader is basically ruined. And you're not going to be able to make any trades, and you'll be confused trading the wrong moves. You will think this is a downtrend on the higher time frame, on the lower time frame. Let me show you what's going on here, okay? Let me go ahead and mark this real quick. This corrective move. Go to the 1 hour time frame. If you go to the 1 hour time frame, the small corrective move that you saw on the higher time frame, on the daily time frame, will look like a big downtrend, when this is not in reality a downtrend. Look at this. How small it was on the high time frame on the daily, but when you go to the lower time frame, it looks like a B, C, A, B, C. It looks like a downtrend clearly. So if you don't know what you're doing and you don't have the higher time frame data, like right here, let's say price, you might end up saying, you know what? We have a move, high to low, and then we have a lower high, left to lower low, and then we have a lower high, and then we have a almost a break of a structure. So you will think that you are trading a downtrend market and you will want to sell. Then the price gets to an area of supply zone. That in your mind, you're thinking that this is a downtrend. I'm looking for a move to the downside. But in reality, this is just a corrective move. And see what happens here. Boom, you're done. You're taken out. And now what's going on with the price? Market realigned with a higher time frame impulsive move. Look at this, guys. Now price just reversed. So all this was on the low time frame, on the high time frame, was a corrective move. This was the impulsive move, and this was the corrective move. So your job as a trader is to identify high for an uptrend, higher low, and then higher high. Once you get A, B, C, once you get A, B, C, now you're going to go ahead and mark A, B, C. You're going to go ahead and mark your last break of a structure for an uptrend. Last break of a structure for an uptrend. Now, this is the impulsive move, which is the continuation move. After this, corrective, and then continuation. Now we're going to go through another phase of corrective move. You see, now this is another corrective move. This is not actually a downtrend. Let's go to the 1 hour time frame again. What does it look like? It looks like a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then lower low, lower high, and then lower low. It looks like a downtrend. But then this is all a corrective move or a B move for the higher time frame. This is nothing but a B move. Look at this. Now price already reversed from a area of demand zone. And what did it do after that? Price started continuing and realigning with the higher time frame. Look at this. Price reversed from a high time frame demand zone. But for you, you will be thinking on the lower time frame, I can sell. I can continue selling. High, low, low, high, low, 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 high, low, 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 high, low, 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 high, and then low, 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 high, and then after that, lower, low. So you're waiting for a price to reverse from here to continue to the downside. But in reality, there was a higher time frame demand zone. Price was basically uptrend on the high time frame. And now price basically will realign with the higher time frame continuation. Look at that. So you as a trader go into the higher time frame and identifying this impulsive, corrective, continuation. Impulsive, corrective. You'll be like, you know what? I have an uptrend move here, which is A leg. Secondly, when I go to the lower time frame, here I'm dealing with a corrective move. That means I better know where to exit for this short-term downtrend, which is a corrective move for the higher time frame uptrend. Okay, and then once the price gives you an entry from the lower time frame, you just take the entry and ride with the higher time frame continuation. Simple as that. It doesn't take a rocket science to figure this out, but it takes a lot of patience in order to know this information, in order to wait for these opportunities. You have to be very patient, because if you're not patient, you're not going to be able to wait. You're just going to take anything that comes your way. And this is how you blow your accounts and be among the 95% that never becomes a successful trader. Okay. Now we have price realigning with the higher time frame. What do we have again? We have another break of a structure. So now you're like, you know what? We have an A leg, which is impulsive. We have a B leg, which is a corrective. Now we have a C leg, which is a continuation move. Okay, break of structure. Okay. But if you go to the lower time frame, this is how it looks like. You see how messed up this is? Too much information. High, 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 low, high, 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 low, boom, boom, boom. Too much information. But when you go to the higher time frame, it is very clean. Very clean. Impulsive, corrective, continuation. Very easy. So if the price gives you a corrective move, then you wait for it. Now, this was a corrective move. Let me cut the price here. Okay, this corrective move, market. So impulsive, corrective. Go to the low time frame on the 1 hour. How does it look like? Look at this. You see how much data you're dealing with now? Lower high, lower low, lower high, lower low, lower high, lower low. So now you'd be like, you know what? Hey, I'm dealing with a downtrend. I'm dealing with a downtrend, so therefore I'm looking for a sell position. There's nothing wrong with trading the corrective move, but the question is, where is your end zone? Where are you trying to exit here? You don't want to be selling over here again and continuing to the downside. That's very dangerous. Look at this now. What does price do again? Realign with the higher time frame move. Look at this. Price also realigning with the higher time frame move already. Boom. All right. Impulsive, corrective, continuation. Impulsive, corrective. Now it becomes too deep. So now this is when you question, you know what? Now price might reverse or might create a change of character. Be careful with that. If the corrective move goes too deep, that means it's about to reverse. It's about to go from uptrend to a downtrend. Look at that. So now here we have a change of character. To verify, you have to have a corrective move. You have to have a corrective move. Drop, base, drop. Let me cut this again. All right. Now go to the 1 hour time frame. What does it look like? Corrective move looks like high, 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 low, high, 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 low, high, high. But in reality, this is just a corrective move for the higher time frame impulsive move. All right. But you as a trader, once you get this, I have a drop, I have a corrective. Now I'm waiting for a continuation to the downside. Look at that. If you turn this into a line chart, it says drop, base, drop. A, B, C. A, B, C. This is just a corrective move. Impulsive, corrective, continuation. Okay, that's your job as a trader to identify A, B, and C. A leg, B leg for corrective, and then C leg for continuation. Very simple. A, B, and then C. All right. So this is exactly how it is. If you know this information, you will be able to execute trades with proper knowledge. You know exactly what's going on. You know what you're dealing with on the higher time frame. You're dealing with an uptrend, impulsive. Now you see a corrective move. And now you're waiting for the continuation move. All right? This is how you trade the markets. Drop, base, drop. Okay, even let's say this is small corrective move, this small corrective move. You see this small corrective move here? Drop, base, drop. This small corrective move, if you go to the 1 hour time frame, will look like this. You see, I put the circle. What does it look like? High, 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 low, high, high. Oh, you see that? Now you think you're trading an uptrend market, but in reality, this is just a corrective move for the higher time frame. Okay? This is just a corrective move for the higher time frame. It's nothing but a corrective move. Price continuous creates a change of character. Impulsive, corrective, continuation. Drop, base, drop. Drop, base, drop. Drop, base, drop. A, B, C. A, B. Comes too deep. Okay. So that's exactly how it is, guys. That's exactly how it is. Look at this. Drop, base, drop. Drop, base, drop. Drop, base, drop. Impulsive, corrective, continuation. Impulsive, corrective, continuation. Impulsive, corrective, continuation. All you have to do is identify these pullbacks and these impulses moves on the higher time frame. Very easy. Okay? Don't just take a trade. Know the direction of the market. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then lower low. Just identify that. It takes very, a great knowledge in order to execute this. And now price is trading around an area of higher time frame supply zone, which we might expect price to continue going down or to create a change of character and then continue to the upside. It looks like this downtrend is about to end. Okay? Anyways, guys, go ahead and subscribe to the channel, like this video, share this with your friends. I'm going to make part 2 of this video, and I hope you enjoyed it. Thank you very much again, your brother Jamal. Until next time, happy weekends. Ciao.